Hey everyone, welcome back to the channel. If you're new here, I'm your daily guide through the US stock market, breaking down the most important moves, data, and trends so you can stay informed and ahead. Today is June 28th, 2025, and the markets bounced across the board. SPY, QQQ, and DIA are all in the green after a choppy stretch. We've got a ton to cover, including key macro data, sector rotations, Fed commentary, and tactical strategies you can use right now. Whether you're a long-term investor or a short-term trader, this daily update is crafted to help you make smarter decisions with confidence. So grab your coffee, settle in, and let's dive into today's full US market breakdown. SPDR S&P 500 ETF Trust is trading at $614.91, up 304 or 4.50% from yesterday's close. The intraday range was $610.90 to $660.38, with volume around 86.3 million shares. Site Turn Finance Guru. Invesco QQQ Trust sits at 548.99 or 0.36%, trading between 540.45 and $549.91 on approximately 57.6 million shares. Southern Finance 1. SPDR Dow Jones Industrial Average ETF DIA reached 438, climbing forward at 4 or 0.93 cent, with a session high low of 434.99 to 439.55 and volume near 3.6 million shares. Site DENHUT. What the numbers say. Broad strength. All three major ETFs are up, signaling relief and broad buying after last week's volatility. Tech leads, but cyclicals rally. QQQ held its ground, while DIA's strong performance shows renewed investor confidence in industrials and value. Market breadth improving. The rally isn't limited to tech. Lifting DIA suggests more balanced sector participation. Key drivers behind the rally. 1. Cooling inflation narrative and CPI markets digested a surprise. May's CPI came in unchanged month over month, and the year-over-year figure held steady at around 2.4 cent. Corson Search, Turner News 23. Core inflation showed signs of stabilization. With the backdrop of declining energy prices, the overall inflation risk softened, reducing pressure on Fed tightening expectations. Easing yields and bond market reaction. The U.S. 10-year Treasury yield pulled back from recent highs to around 4.25% as bond traders factored in more dovish rhetoric from the Fed. Comments from certain Federal Open Market Committee members hint at a potential rate cut path starting in September, boosting equity sentiment. Site Turn Search 1 News 28 Islam. 3. Fed Speaker Commentary. Fed Chair Powell and colleagues recently signaled that future rate cuts depend heavily on sustained data. Though the market's narrative pivoted toward earlier than expected easing, investors are now pricing in a 60 to 70% probability of a September cut. Site Turn Search 2 Turn News 24 ROM. Oil price retreat and geopolitical stability. Oil briefly spiked earlier in June due to Israel-Iran tensions. Today, prices cooled, removing a near-term inflation overhang and encouraging broader economic optimism. Site Turn Search 3 Turn 0 News 20. Sign. 5. Trade developments and global supply chains. Announcements around easing trade friction with Canada and Mexico lifted cyclical sectors. This improved outlook for industrials and materials contributed to DIA's solid outperformance. Site Turn Search 4 Turn News 29. Sector market internals. Tech, AI, QQQ held steady. Megacap names like NVIDIA, Microsoft, and Apple led, buoyed by fresh optimism around AI, cloud, and generative services. Investors see defensiveness in these long-duration growth stocks amid an easing macro outlook. Site Turn Search 5 Turn News 26 An. Industrials, cyclicals. DIA jumping nearly 1% today highlights rotation back into cyclicals. Industrial and materials stocks rallied on optimism around improving trade conditions and moderating yields. Financials, banks. Regional banks rallied on the softer yield curve and hints of future rate cuts. Money managers are rotating capital toward financials on expectations of stable loan growth and better margin outlooks. Consumer discretionary. Fueled by a rebound in consumer sentiment, discretionary stocks, including autos and housing-related names, gained ground. With retail sales due in the coming days, this sector is set up for momentum. Energy oils pullback muted today's price momentum in energy equities. Investors are adopting a cautious stance, Balancing supply tightness in the Middle East and broader economic demand trends, cite turn, search 3, turn news 25. Utilities defense. Utility and defense stocks offered shelter that with investors rotating modest exposure here as hedges amid geopolitical unpredictability. Macro view and Fed outlook inflation holding steady around 2.4% is a welcome signal. Core inflation deceleration supports potential easing. However, Fed members are keen to avoid hasty cuts. Trade developments and monetary policy remain intertwined in investors' minds. Cite turn search 1, turn news 20 forum. Complete bulls case. Cooler CPI plus softer yields plus easing uncertainty, potentially boosting markets toward S&P 6500 or higher by year end. Conversely, inflation surprises or new trade tensions could pressure the Fed to delay easing. And hash for economic events and catalysts on deck. Upcoming May retail sales, industrial production, consumer confidence, and Fed speakers lined up next week. Earnings. Mid-July kicks off quarterly reporting for megacaps. This will offer fresh momentum or headwinds. Geopolitical. Maintained watch on Middle East headlines and Canadian mech supply chain announcements. Bond supply. Continued fiscal discussions could impact bond issuance and yield dynamics. Strategy and portfolio recommendations. Core long-term allocation, 12 to 24 months. Allocation, focus up, 40% large tech AI, QQQ or direct exposure to NVIDIA, Microsoft, 20% industrial cyclicals, position for upstream recovery and infrastructure, 15% financials, utilities, defense, diversify defensives and yield assets, 10% consumer discretionary, ride improving sentiment, 10% bonds, cash, maintain liquidity for tactical plays, 5% small cap opportunities, dip trades in IWM area. Trading moves. Consider adding SPY on dips to 600 to 613.10. Add tech call spreads if QQQ breaks above mid 550s. Rotate into cyclicals daily with relative strength signals. Hedge using protective puts ahead of CPI and factory data. Hash risks and contingencies. A stubborn inflation print might delay Fed easing. Trade tensions flare up could derail cyclical momentum. Geopolitical events affecting oil could trigger market turbulence. Market valuations remain extended, with SPY trading at 22.23 tabs forward EPS. Watch for growth slowdowns. Cite turn news 30, turn news 30 san. Scenario outlook. Bull case. Calm trade and inflation. SPY 6,600 to 6,800. Base case. Range-bound trade. SPY in 6 to 100 to 6,400. Bear case. Rising yields or headline shock. SPY tests 5,800 to 6,000. Final word. Today's rally feels like a sigh of relief from the prior week's jitters. The key takeaway: inflation and yields determine the next leg. Rotate into tech, cyclicals, and defensives, but stay ready for tactical shifts. Like always, discipline, balance, and clarity matter most. That's it for June 28th. Let me know which sectors or tickers you want me to deep dive. Don't forget to like, subscribe, and ring the bell for tomorrow's full update. Thanks for tuning in. Catch you in the next video.